All right, so we're gonna start with the dad joke. I was prepared with the dad joke, which is fine.
I have one.
Oh, you do?
Yeah.
Ready?
Yes.
Just when you think food can't call you, boom, onion rings.
I had the flu last week. I don't know if I told you this. But I was okay by the weekend, by Saturday. I only get sick during the week. I guess that means I have a weekend immune system.
Oh, weekend immune system. Welcome. Thanks for joining us here today. We've got a little classy setting here today. You got some artwork. We're just trying to be very,
It's a Van Gogh.
We have a lot of craziness going on for February. We were chatting about it before we turned the mics on. February is a little uppity. It's all kind of all over the place so far. So we've had a lot of questions that I've been getting from our buyers that I'm going to field Tim's way. A lot of them are just, concerns, or anytime there's a change in command, no matter what, we don't get political here, but anytime there's a change, everybody wants to kind of see how things that are happening are going to affect them and so forth. So we're going to go over some of those topics and some of the things and some of the questions I've been getting asked by my clients.
Sure.
First and foremost, we've been seeing a slight drop in FHA loans and rates, but they're not drastic, just like the usual, kind of going down. Yeah. But I was under the assumption, and so was a lot of my clients, that FHA was not higher than conventional. People believe that conventional is the better loan, and that it had better rates and better options, but that's not always the case.
So an FHA loan is a government product. It's government insured.
Got it.
And what happens there is there's less risk to a lender or a mortgage-backed security purchaser. So those rates tend to be a little bit lower. VA, FHA, USDA, those are government loans. They tend to have lower rates than conventional. However, sometimes the trade-off, depending on credit score, loan to value and things, sometimes you'll take a higher rate with a conventional loan because the PMI is cheaper, or because there's no PMI at all, whereas FHA, there is a factor that is likely for the life of the loan in certain instances. So there is a trade-off. It's not always what's the best rate. It's also what else am I paying for in my mortgage payment, which is why sometimes we'll lean conventional over FHA.
Got it. That makes more sense. All right. So that's good. So the other question I have been getting with people is down payments. Mm-hmm. Now the FHA is not as much down as you would think. It's actually really low.
3.5%.
3.5% down, which that's pretty manageable.
Yeah.
However, there's also grants and things, but we have to kind of keep an eye out for some of those grants because sometimes there's a catch.
Yeah. Well, recently a lot of us have marketed the FHLB, Federal Home Loan Bank grant that are for first-time home buyers, first responders, and you can get a nice chunk towards your down payment with that program. However, those of us that do a lot of Maryland Mortgage Program, or CDA, that we talk about, that is a consistent program throughout the entire year. You don't have to wait for funds to be replenished. And a lot of times you can make more money and still qualify for that program versus FHLB, which your income limit's a little bit lower. And then also, just being in Southern Maryland, if you can go USDA, it makes more sense to go USDA than pairing an FHLB with FHA or conventional. However, again, it's another tool in our tool bag. If you're somebody that is limited with cash, you can even pair Maryland Mortgage Program with USDA and get your closing costs paid. That's awesome. So there are so many options. If you're somebody who's like, I don't know if I can buy a house because I don't have much money, there's so many options to put you in for down payment and closing cost assistance that it just warrants a phone call and checking the temperature of it. Yeah.
Now, sometimes when we get into those scenarios, dear buyer, you sometimes have to have a little bit of patience, because if you have somebody rolling in and making an offer, maybe against your offer, that maybe is putting 20% down or 30% down or whatnot. There's times where like the seller's just going to select that offer over yours. So you just have to have patience. You got to just make sure that the house is a perfect fit for you. You need to know where your box is. Like, I need it to be this kind of house, and I need it to be in this budget, and I need closing help. And you just got to be patient. You may have to make a couple of offers here and there. You might get beat out for some of these things because it's still competitive. Inventory is still low. But you have to do what's right for you and just relax and be patient sometimes,
Yeah, and I think that sometimes the buyer wonders, if they're doing USDA or one of these programs, why would a seller not pick mine because I'm doing down payment assistance? Maybe that's not really the case. Maybe it's just because this other person that can put 20% down on a conventional loan they can waive their appraisal, or they have flexibility when it comes to cash, that the seller has less worry that things are so so tight that they can't budge at all.
Yeah.
So that's a real thing. Just because your program is X versus this other person that's doing conventional, I don't think that that's real. It's just the flexibility. If somebody has money, as you can imagine, they can meet terms a little bit easier.
Yeah. So I'm dealing with sellers and they're like, oh, wow, they're putting 20% down. They're more apt to say, well, if something goes sideways during the deal, they've got a little bit of money they can put in and kind of keep things moving and keeping things flowing, which is not always the case. But I mean, a lot of sellers just have that mentality. So
it's going to make sense why you might have that mentality. But then again, you and I both had buyers that can put 20, 30% down. That's still nickel and dime the seller. I mean, that is a real thing.
Yeah. So you have a lot of scenarios. The next question I get pretty frequently now too, and again, we're not getting the political side of it, but there's lots of government overturn right now. They're going through and kind of cleaning house a little bit and doing some things. But the question I'm getting is, will that influence our market? I still see that the unemployment rates are still really low, which is good for the economy in general, but I don't think that's going to have an effect on your job.
Well, listen, we are in the DMV, so maybe we are a little bit more impacted by any sort of government jobs that were lost. But it's such a blip on the radar when it comes to overall unemployment rate that the Federal Reserve has to react to. You know, they're a dual mandate. One is in keeping inflation at 2%, and the other is full job stability in the American consumerism. So if your unemployment rate is hovering between 4% and 4.2%, as it has for months and months and months, and that's not moving much, I don't think that there's any levers for the Federal Reserve to pull. So these government jobs, while locally maybe we're impacted, the Federal Reserve is thinking big picture.
Yeah,
and the unemployment rate hasn't really spiked.
So it's not going to affect the rates very much. It's not going to have a big impact. Like you said, here at home, it might. But if you're in the general world, then it's not really going to impact too much. But
and you have to also figure when it comes to like initial jobless claims and things like that the Federal Reserve pays attention to. Some of these reports, they're very complicated because initial jobless claims, you have continuing claims. The market reacts to these numbers if they're higher or lower, and then some people just stop reporting that they're unemployed. Sometimes they stop reporting that they're looking for a job, and then they don't get counted in these reports. So there's a lot of flaw to it.
Numbers,
but again, I just want to kind of hammer home the fact that these government jobs, while certainly impactful to certain communities, is such a small blip on the radar when it comes to overall unemployment rate.
Yeah, and you and I have talked about it in the past. There wasn't anything specific that either side of the who was running for office did anything specifically for the housing market. They just kind of, it was one of those things where like they felt both sides that it was just going to kind of work itself out. It seemed like, and so it kind of is. It's kind of working itself out.
Yeah, I mean, I know that this administration has said they want to focus on lowering the 10-year Treasury, and if the 10-year Treasury lowers, mortgage rates will lower. The problem is I don't know what influence or what levers there are to pull to dictate that.
Yeah.
Will they try? Perhaps, and that will be good for mortgage rates, because if you're following any sort of financial graphs, 10-year Treasury falls, mortgage rates tend to fall as well.
Got it.
But again, I just don't know what can be done to influence that directly.
Yeah, I think we're just going to have a flatlined year where everything's just kind of feeling itself out and recorrecting itself. We've inflated a little bit. We're just going to kind of...
It feels that way. It feels that things have just been very sticky. If you do like a 2-year look back, rates have kind of gone like this. But if you do a straight line across, we're kind of in the same general ballpark of like mid to high sixes. Every now and then we'll tickle 7, and then other days we'll tickle 6.25, let's say, on a government loan. But we are in that range, and we have been for a significant amount of time. So anybody that's waiting for rates to fall, you just can't time the market. It's impossible.
No. But the inventory is staying a little bit low, so you have to have some strategies. You got some people in your corner that are local that'll help you navigate some of these. And we know a lot of the realtors and a lot of the listing agents, and it helps because I know you make personal calls every time you put a pre-approval letter together. So little things like that give you a little bit of advantage when the sellers feel comfortable that the deal's going to get done.
Absolutely.
It just makes it a little easier, the whole process.
Yeah, if you have local connections, real estate connections, and you can pick up the phone or even shoot them a quick text, and they know who you are on the other side, it just inherently is a comfortability that they can relate to their sellers. Like, hey, I know that this offer is really solid because it's a good agent, good lender on the other side. Hopefully we can make the numbers work, but at least I know that I'm confident it's going to get to closing.
Yeah, there you go. That's our February. So in all the craziness and things that are happening, just know that we are the even keel. We are like the voice of reason for you. So
that's right. We are. The thing is, we are career real estate and mortgage people, and we just are going to stay the course no matter what.
Yeah.
And we kind of have that really, we obviously are experts, but we can look at it from a macro level because we've been doing it for so long, and we're not very reactionary.
No, pretty even keel.
Yeah, I would say so.
So we have the strategies to help you make the best situation for yourself. And we talked about that ad nauseum, I believe. I think they get the point if they watch any of these videos.
Sure.
But we do the things that are right for you and we set you up for success. And that's our goal.
Yeah.
So there you go.
Excited for March Madness in, month and a half?
We're at March.
Month-ish.
Yeah, so the 29th is, we didn't do, we're not doing the St. Patrick's this year. Mm-hmm. The Scorpion, unfortunately, closed their doors.
All right.
And so I'm going to, celebrate with the family instead, which is first time in 12 years or so.
Yeah.
It's been a long time.
Well, we should watch some college basketball again.
Some college basketball. I got some space that's perfect for that. Yeah. So yeah, we're going to do the 29th. We're going to do a family trivia night at Bull Rushes. So keep an eye out for that.
Nice.
We're making it kind of fun and family oriented. And then after that, it's going to be the pictures with the Easter Bunny.
Uh-huh.
And then we have all kinds of fun stuff going on. We have lots and lots of things.
Love it.
Because we're always on the community. Like I said, we're trying to make a positive impact. We're trying to be out there being active and making the place we live better and connecting you with our local businesses. That's one of our goals, one of our cornerstones. So
I also might have some news soon that First Home Dunkirk is moving to a new office.
Oh, yeah?
TBD. I'm excited to show it to you.
I just did a little segment about how they're starting to do, it's called Deep, and it's a company that's making underwater houses.
Okay.
Are your offices going underwater like in the Chesapeake Bay? Because that would be interesting.
That'd be wild. I mean, Bikini Bottom, SpongeBob stuff.
That's right. Cool. That's awesome.
Yeah, absolutely.
We'll have to get a different venue, huh?
We will talk college basketball on the next video. We'll see.
I had to catch up. I have not been watching as much as I.
Neither have I. I mean, football just ended, so now I can focus on hockey and college basketball.
I need to. I haven't watched a whole lot. I've been bits and pieces.
Yeah, so. I think Mark Few still coaches Gonzaga.
They're in trouble. They may have to win the conference tournament to get in, actually. Yikes. They've had a rough at it.
Off year for your boy Brian.
Yeah, he's not happy. Not happy. All right, cool. Thanks again for joining us as always. Enjoy your February. We'll see you out and about, and then we'll see you again for March when we have another update to help you navigate this buyer's market.
See you guys.